The major mortgage reforms announced by the Chancellor, Rachel Reeves, in her Mansion City speech in the City of London, she's promising the biggest shake-up of Britain's mortgage market in a decade, which is part of a wider effort to revive a sluggish economy. But is this a real solution to the housing crisis, or a risky return to pre-2008 habits? She will make a permanent promise to change the government's mortgage guarantee scheme. This policy means the state will underwrite mortgages with deposits as low as 5%, encouraging lenders to offer high loan-to-value LTV products that would otherwise be too risky. And the Nationwide Building Society, Britain's second largest lender, is already reacting. It will drop the minimum salary requirement for first-time buyers from 35,000 to 30,000, and for joint applicants from 55,000 to 50,000. And this change alone, is predicted to help 10,000 more buyers onto the housing ladder each year. Reeves is also pushing to make it easier for banks to consider rent payment history as evidence of creditworthiness, a long overdue measure for tenants who pay reliably but have no formal credit record. She's described these reforms as essential to making Britain more active and more confident, promising that they will put pounds in the pockets of working people. And the Bank of England has lent its weight to this push. Last week it relaxed rules limiting the number of high loan-to-income, the LTI, mortgages banks can issue, and this would create up to 36,000 additional mortgages in just 1 year, particularly benefiting first-time buyers. It's no small feat in a country where the median annual full-time salary is around $37,430 and where property prices have long outstripped wage growth. So considering the positives, in terms of accessibility, more people will be able to buy their own home with a small deposit and lower salary threshold. First-time buyers are helped. The government estimates that Helping Hand scheme alone will support 10,000 more first-time buyers per year. And renters are recognised. Allowing rental payment history to count as creditworthiness is a fairer approach, recognising the real-world responsibility tenants show each month. Housing transactions drive the broader economy, and estate agents, removals firms, construction and retail all benefit from an active housing market. Nick Mendes of the broker John Charcoal has argued that these reforms could revitalise regional housing markets where prices remain affordable. But this policy is not without critics, and risks are significant. The head of the Financial Conduct Authority, Nihal Rathi, has warned bluntly that relaxing lending standards could go wrong, leading to more repossessions, and higher LTV and LTI mortgages increase the risk that borrowers will struggle if interest rates rise or if their incomes fall. It's an uncomfortable echo of the practices that preceded the 2008 financial crisis. Aaron Strutt of Trinity Financial points out that many lenders have been cautious, targeting higher earners precisely because they want to avoid defaults. But there's also a global problem, a geographical problem. Even if someone earning 30,000 can now access a mortgage, it might not be enough to buy in London or in the southeast, where prices are vastly higher. Finally, as David Hollingworth of L&C Mortgages says, boosting borrowing without increasing housing supply risks pushing prices up even further, helping sellers more than buyers. And this mortgage policy is part of a wider package of reforms that Reeves is calling the biggest financial services overhaul in a decade. It includes cutting red tape for financial firms, making it easier for companies to list on the stock exchange, and even relaxing the rules that hold senior executives personally accountable for misconduct. Reeves says these moves will make the UK the top destination for financial services, attracting investment and creating skilled jobs. Well, I hope so. What do we make of it? Rachel Reeves' mortgage initiative is politically astute. It answers the urgent desire for home ownership and offers practical steps for renters and first-time buyers. It might well help tens of thousands onto the ladder who would otherwise be shut out. But it's also a gamble. By encouraging riskier lending and removing safeguards, the government risks repeating past mistakes. Without addressing housing supply, affordability will remain out of reach for many. And I don't think these changes particularly help those people who are self-employed. In the end, this is a test not just of Rachel Reeves' economic strategy, but of whether Britain has learned anything from its own history of housing booms and busts. As ever, the question is not whether we can make credit cheaper and more available, but whether we can do so safely, so that the dream of home ownership doesn't turn into a nightmare of debt.